Welcome to the June Informer. I thought it would be a great opportunity this month since we've got Patrick Bright up from Australia. We did a seminar last night that was very successful, and Patrick is a buyer's agent in Australia. Now, if you don't know what a buyer's agent is, that is someone in Australia that goes out and helps people buy property. He doesn't sell. I've got a bio on the website you can download so you can get a bit more information about Patrick's history and his coverage in Australia. But he's got the largest buyer's agency in Sydney and has bought for clients over the last 10 years over $500 million in property. So he knows what's going on in the marketplace in New South Wales. He does a great job for my clients personally, which is the biggest endorsement I can give, and we're very happy with using the service to find good property in Australia. I thought I'd have Patrick here for a brief segment and just ask a few questions about what's happening in Australia and the marketplace. So thanks for coming.
Pleasure.
Patrick, first question is, in Sydney right now, where do you see the marketplace? So lots of consumers and buyers are looking at what's happened to the Sydney market. Interest rates are low, they're at 50-year lows. Where do you feel the property prices are going in Sydney?
Well, we should break them up, because you look at a macro market and you talk about, the market's sort of dropping on a world scale. Sort of people go, the US market's off 20%, Hong Kong's off 20%, Singapore's off 20%, London. Where's Sydney at? Now, I've grabbed the stats and downloaded them off RP data. This year, the first 4 months of this year, nationally, the market's up 2.8%. Bit of a surprise to a lot of people, in fact, myself included. Then if we break that down to a more lower level, we look at the individual markets. So from the 12 months to April, the RP data stats are, so from April 08 to April 09, the market in Sydney's up 2%. Melbourne's up 1.5%, Brisbane's down 3%, Adelaide's down 1.3%, Perth is down 5.4%, and Canberra's up 0.2%. So that just gives you a bit of a more of an understanding. Now, if we're going to break down, as your question's more Sydney focused, where I am based, in the under $600,000 price point, which is where the first-time buyers are getting a lot of grants and things like that, and no stamp duty, up to 500 and prorated to 6. That market's rocketing along. It's crazy. I stopped buying in it basically January. I said, just let's forget it, because there's just too much heat in the market. People are paying 5 and 10% more than what they should for property. So yeah, leave that alone. In the 600 to sort of a mil, it's fairly firm. So we've got a lot of plenty of buyers there, and supply and demand seems to be meeting it quite well. Once you get over $1 million, it starts to get a little bit softer in that 1 to 2 bracket. It's a little bit of flexibility, more at the closer to the 2 end, maybe 5% off. We're seeing in certain pockets, and I'm talking about the good property. Sure, you can always find 5, 10, 20% off real estate prices, but they're not genuine off quality real estate. There is quite a difference in diverse market that we're in. If you go over the 2 mil markets, get softer again, and above 3 is very soft. And interesting stat that they also had was the analysts showed that 80% of all suburbs are rising, and only 20% of the top end is the part that's falling.
So it's your 3 million plus.
And I definitely agree with that.
Right.
Yeah, across the board.
Which I probably could, agree with definitely, because we're seeing a lot of a mass exodus from Hong Kong of expats that are going back, and they've had properties that they've had to sell for a fire sale because they no longer have the pay package to fund that. So is that coming into the marketplace?
Yeah, look, that really happened prior to Christmas. We saw a lot of pain selling in that sort of October, November, December period. That's when the people had to make decisions promptly with their margin calls and things like that. In fact, things have bounced back quite a bit this year, and we're just not seeing those same distressed sales. So it was a window of opportunity. Hindsight's a great thing. At the time, we didn't know. Most people would have thought it probably would have got softer this year, but it certainly hasn't. It's actually got tighter, and the market's been very well supported, and supply and demand seems to be... See, supply is down, and demand is obviously off a little bit too, but they seem to be meeting each other, which is stopping the market backing off further. Plus, we've got vacancy rates still hovering around 1% in the Sydney market.
Which is not bad.
It's very tight. I mean, it was nearly 4%, 3.94% back in 03, and building and construction has actually been falling short every year since 03 of what Housing Industry Association looks at as just a healthy new supply to meet ongoing births and growth and immigration.
So if anyone's right now owning a Sydney property and haven't revised their rents are coming up and they should be revising
Yeah,
them.
at the moment they're stable. The last 6 months they've been stable. We're seeing with our property management side of the business. But prior to Christmas, we saw a couple of years of good rises, 10% a year. So yeah, if you're not at the moment fairly stable, once you get over at the moment that sort of $1,000 to $2,000 bracket, so up to $1,000 a week, rents are very firm and probably still rising a little bit. That $1,000 to $2,000 bracket, a little bit softer. We're finding properties that we're re-renting now, sort of saved $1,500 a week last year. Now we're getting about $1,300, so it's come off a couple $100 a week in certain areas, probably. And then we're not seeing the relocation of expats coming to Australia. We don't have a big population in Sydney of expats, but there's certain areas where they tend to live, and those areas are the ones that are suffering with that expat type property, that home that sort of rents for around about that $1,200 to $2,000 a week. There's just not the demand at the moment for that, so that's off a little bit.
You were talking before about the first-home buyers, and my clients saw on the seminar we had last month, which was the Great Depression ahead, that we talked about the next herd that's been led to slaughter in Australia is the first-home buyers. But that also presents an opportunity for people to actually be selling their up to $600,000 price. And how is that affecting the market?
Well, look, I've been advising my personal clients that if they were going to sell, now I'm not a fan of selling property ever. I'm the Warren Buffett approach to real estate: buy something you're happy to own indefinitely, because it's something you can refinance against, take the equity out and go again, rather than transaction costs trying to go for something bigger each time. But if you are going to sell, and there are times to sell, if your lifestyle and things change, if you're going to get out, and you've got property valued under 500, I've been telling people for 6 months, get out of it. If you're going to get out of it in the next 2 years, I don't think you're going to see the prices you're seeing right now. And the government induced home buyer frenzy that was created with the bonus $7,000 and $14,000 for grants. That has now been extended beyond June to October, so you've got a little bit more time to get out of your properties, and it'll taper off and be gone by Christmas.
Okay. When you're looking at the current marketplace in Sydney, and quite often I have clients walk in and they're always saying, "Todd, buy me a foreclosed home." And it's something you get all the time when people are calling.
Yeah.
Can you just talk a bit about that?
Yeah, they love that sort of thing. They sort of want to get these distressed sales, deceased estates. When I was a sales agent back in a former life, I'm reformed now.
Congratulations.
But more than 10 years ago, in the past, when I was a sales agent, if I could advertise mortgagee sale, deceased estate, or desperate vendor on any signboard or advertising, I would. Because it always brought a crowd, and the buyer, whoever bought it, the punters, as I call them, lambs to the slaughter, they came in and they thought, whatever I pay, I'm getting a bargain because it's a distressed sale.
Sure.
And these were the ones that actually went above. Because if you are going to sell a property, swallow your pride, let them advertise mortgagee sale, you'll get more money for it. Because you'll just see people line up, vultures wanting to get a great deal, and they'll outbid each other because they think whoever ends up with it got a great deal.
So it's not the sale behind the curtain. People actually think they're getting the secret deal.
Yeah, they do.
Sure.
It's madness. But
well, let's just hold it there. We're just going to run out of time for this first segment. We're going to just freeze here, and in the second slide, we're going to go through A, B, C, D, E properties that Patrick was talking about at the seminar, because this is something that's very important for a lot of people buying property in Hong Kong, who are buying off-plan property marketeers that are selling these sorts of properties, and the sorts of stuff we try and talk clients out of. So be back in 1 second.